You know how sometimes the world just throws you a curveball? Well, buckle up. Because back in April of 2025, President Trump's announcement of these sweeping reciprocal tariffs felt, well, exactly like that.
Mm-hmm.
This isn't some dry policy paper. It's a seismic shift in global trade that has the potential to really touch your wallet and reshape how the entire world does business.
Absolutely. It wasn't a minor adjustment. It was a really bold move that got everyone talking immediately.
Right.
And for this deep dive, you've pulled some excellent source material, specifically a podcast episode titled Trade Winds, Navigating Trump's Reciprocal Tariffs. Our goal here is to get beyond the headlines, unpack the nuts and bolts,
Yeah.
and understand what these tariffs could actually mean for you in your day-to-day life.
Okay, so let's get into the specifics. The announcement dropped on April 2nd, 2025. President Trump signed an executive order, and incredibly quickly, by April 5th, a 10% tariff landed on pretty much everything imported into the United States.
Right, that was the baseline.
But the really intriguing part, the reciprocal aspect, kicked in just a few days later on April 9th.
What's particularly noteworthy is how these reciprocal tariffs were structured. The administration didn't just apply a blanket increase across the board.
Yeah.
Instead, they directly linked the tariff levels to existing trade imbalances. It was a very targeted approach based on who the U.S. has the larger trade deficit with.
Right, making it very specific. So because the U.S. buys significantly more from China than it sells, imports from China now face a hefty 34% tariff.
A big jump.
And the European Union isn't far behind, with a 20% tariff now applied to their goods. The stated aim, as we understand it, is to tackle what the administration views as unfair trade practices and, crucially, to give American industries a leg up.
And that narrative of protecting domestic industries definitely carries weight for a lot of people who feel that global trade hasn't always benefited American workers and companies.
Sure.
However, when you start to dig into the immediate economic consequences, the picture becomes quite complex.
Complex is an understatement. Almost the moment the announcement was made, the markets reacted. We saw a noticeable dip in the S&P 500, and the U.S. dollar actually weakened.
Yeah.
That's a clear signal that investors were feeling some nervousness about the potential fallout from these tariffs.
Those market reactions are often the first telltale signs of broader economic anxieties. The primary concern among economists was the potential for a significant jump in inflation,
Right.
possibly pushing past that 4% mark. And as TradeWinds pointed out, this kind of inflation tends to hit everyday consumers hardest, eroding their purchasing power.
Exactly, because if the cost of importing raw materials or, essential components goes up, those costs aren't just absorbed. They're very likely to be passed on to us when we buy groceries, clothes, or just about anything else. And it's not just about what we're buying right now. It could also make businesses think twice about investing in the future because of all this new economic uncertainty.
Precisely. Businesses thrive on a predictable environment. When you introduce substantial tariff barriers, it creates a climate of hesitation.
Yeah, uncertainty.
Companies might delay expanding their operations, investing in new technologies, or even developing new products because it becomes much harder to anticipate their future costs and profitability.
Now, there's also the argument about revenue. The Tax Foundation estimated that a flat 10% tariff could generate around $200 billion in annual revenue. That sounds like a huge sum.
It is a significant figure, but as you rightly pointed out, the crucial question, and one that TradeWinds really emphasized, is what the real cost of generating that revenue is for the average American household.
Right, where does it come from?
That $200 billion doesn't materialize out of thin air. It's essentially paid by consumers through higher prices or potentially by businesses through reduced profits, which can then have knock-on effects on jobs and future investments.
So domestically, we're looking at some potentially significant downsides, but this isn't happening in isolation, is it? The rest of the world definitely had a reaction to these tariffs.
Indeed. The international response was immediate and quite strong. European Commission President Ursula von der Leyen didn't hold back, condemning the tariffs in no uncertain terms and warning about the significant economic damage they could cause, as well as the very real risk of escalating global protectionism.
And it wasn't just words, was it? China, being one of the primary targets of these tariffs due to the large trade deficit, acted very quickly.
Very quickly.
They slapped a 34% tariff right back on all goods coming in from the U.S., starting just a day after the U.S. reciprocal tariffs went into effect.
That swift tit-for-tat response is exactly what many economists were concerned about. When one major trading partner imposes significant tariffs, the almost inevitable reaction is counter tariffs. And that's the slippery slope that can lead to a full-scale trade war. Trade winds really highlighted how quickly these retaliatory measures can escalate.
And it sounds like other countries are considering similar actions. It's like a chain reaction where one tariff triggers another, and suddenly the whole landscape of global trade is facing serious disruption.
What's particularly worrying is the potential for severe disruption to the intricate global supply chains that businesses have spent years building and optimizing.
Yeah, those complex chains.
These tariffs introduce significant new costs and uncertainties, potentially leading to further price increases and inefficiencies as companies try to adapt.
Shifting back to the U.S. for a moment, it's fascinating to see the political response to these tariffs. It's not a clear-cut issue, even within the Republican Party, right?
That's a really critical point. While there's definitely support for the idea of strengthening American manufacturing and addressing trade imbalances,
Sure, that core message.
there are also significant concerns being voiced about the potential negative economic consequences. Some within the party are worried about the impact on consumers, the risk of retaliatory measures harming key sectors like agriculture, and ultimately, the potential political fallout.
Especially when you think about the key voter groups that could be significantly affected. Farmers, for example, who rely so heavily on exporting their goods, could be hit hard by retaliatory tariffs from other countries.
Absolutely. Major export markets.
And manufacturers who depend on imported components to keep their production lines running might also face rising costs and reduced competitiveness. With an election on the horizon, these are really crucial considerations.
Absolutely. The timing of these tariffs adds another layer of complexity to the political landscape. Policies that negatively impact important voter demographics can have significant electoral consequences.
Yeah.
And the administration will be paying very close attention to how these measures are being received by the public.
So as we look ahead, there are some really big fundamental questions that remain unanswered. Perhaps the biggest one is whether these tariffs will actually achieve their stated goals. Will they genuinely reduce trade deficits and spark a resurgence in American industries?
That is the central question, and as trade winds explored, the historical evidence on the effectiveness of tariffs in achieving these broad economic goals is quite mixed.
It's not straightforward.
No. While specific, targeted tariffs might offer temporary relief to certain domestic industries, the wider economic impact often includes higher prices for consumers and decreased competitiveness for businesses that operate within global supply chains.
Or, as many fear, could we end up in a scenario with prolonged trade disputes, escalating tariffs on both sides, and ultimately significant economic hardship for everyone involved?
That's a very real possibility. Trade wars are rarely easy to navigate. And given the deeply interconnected nature of the modern global economy, the negative repercussions can be widespread and difficult to contain.
However, there's also been talk from the administration that these tariffs could be a strategic negotiating tool. The idea being that by imposing these measures, the U.S. gains leverage to push other countries into what they consider to be more favorable trade agreements.
That's a common rationale put forward in defense of tariffs. The hope is that the economic pressure created by the tariffs will incentivize other nations to come to the negotiating table and make concessions.
Makes sense, in theory.
However, the success of this strategy hinges on a number of factors, including the willingness of other countries to negotiate under pressure and the potential for miscalculations on all sides. It's a high-stakes game.
So it sounds like we're in a period of considerable uncertainty. Businesses and consumers are going to need to brace themselves for potential swings in the markets and in the prices they pay for goods.
That's a key takeaway for you listening. Regardless of how this situation ultimately plays out, the near future is likely to involve a degree of economic volatility.
Right.
Businesses will need to be agile in adapting their supply chains and pricing strategies, and consumers may need to be prepared to adjust their spending in response to potential price increases.
So just to summarize our deep dive into President Trump's reciprocal tariffs, we've covered the specifics of the announcement itself, the potential for significant economic consequences like rising inflation and instability in the markets, the swift and strong international condemnation and retaliatory measures we've seen, the divided political landscape here at home, and the very uncertain road ahead.
And if we step back and look at the bigger picture, as trade winds also emphasized, what we're really witnessing is a significant challenge to the established global trade order that has been in place for decades.
It feels like a major shift.
This policy shift has the potential to reshape international economic relationships in some really fundamental ways.
So here's a final thought for you to chew on. Given how interconnected the global economy has become, what long-term strategies might individuals and businesses need to start thinking about now to navigate this evolving trade landscape?
Yeah, thinking ahead.
It's not just about reacting to the immediate changes, it's about proactively considering how these shifts could impact the future.
And as the dynamics of global trade continue to shift and evolve, staying informed and understanding the underlying forces at play will be more important